What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. You guys asked me, so my 5 high yield dividend stocks that I'm recently buying or targeting on my M1 Finance dividend portfolio. And some of you guys have mentioned that there's some issues with M1 Finance trying to implement my Death Star strategy into that. Well, I'm going to be honest with you. I do need to make some changes with the Death Star, but I'll go over that maybe next week in a video just to implement a strategy with certain monthly dividend stocks, and you can maybe implement QYLD, RYLD, and XYLD. I'll go over that next week in a video. So these stocks have recent dividend hikes. I'll do a quick dividend stock analysis, and I'll explain to you why I'm buying them. So make sure you smash that like button. Again, if you're new to this channel, make sure you hit that notification bell once you subscribe, because I'm going to be pumping out videos, here and there sporadically. So keep an eye on my channel. So even when I'm working on certain days, I try to pump out a quick video. So I just want to let you guys know I try to get 5 or more videos a week. So that's why you guys need to keep an eye on my channel. So let's check these out right now. The first stock is Verizon Communications. I'm going to be loading up on this one. I want to get to at least 100 shares of my M1 Finance dividend portfolio. I actually like it better than AT&T, and I'll go over that with you with a dividend stock analysis between both stocks. So you're seeing the S&P is doing very well against these guys. And here's AT&T. They're just down. Verizon's a little bit up. They're a little bit more expensive than AT&T. They have a dividend yield of 4.80%, a PE ratio of 10.04, 22.55 million US dollars. The market cap is 20.88 billion US dollars. Just remember, everybody needs a phone. So Verizon is in demand. Their year range is 49.69 to 59.85. Their day range was 53.29 to 53.90, and their previous close was 53.43. So I'll go over their revenue real quick, and I'll go over their dividend history versus AT&T and why I like Verizon better. So this is in millions US dollars. It's 127, 2014, 131, 125, 126, 130, 131, 128. You can blame the pandemic, but I like these trends from 2016 to 2019. And these guys are a pretty stable company. Everybody needs a phone. Everybody needs, communication. This is a very strong communication sector stock. And I like their dividend hikes and their dividend trends versus AT&T. I still own AT&T, but stability-wise and favorability, I like Verizon better, and I'll explain to you why. So AT&T was kind of a dividend aristocrat. It was sitting at 45 cents, then 46, then 47, then 48, then 49. And all of a sudden, it just stopped at 52 cents. They have a high PE ratio, annual dividend of 208, dividend yield of 7.62. This is almost trending in the yield trap. And I don't know how long that they'll sustain 52 cents with everything that's going on with them and, their supposedly their partnership. So I'm going to go to Verizon and show you why I like Verizon better with their dividend history. What I like about Verizon is consistency. Look at this, 2013, 51 cents, then 53, then 55, then 56, then 57, then 59, then 60, then 61, then 62, then it hit 64 cents. So it has some pretty good dividend hikes. Dividend yield is 4.78%, a PE ratio of 10.02, annual dividend of 256. And again, it's $53.46 with dividend hikes. It's a high yield dividend stock. It's above 3%. I like the trends. So that's why I'm going to stick with Verizon, have them a little bit higher than AT&T in my dividend portfolio in M1 Finance. Let's jump to the next dividend stock. And that next stock is Store Capital. So they are sitting at $30.84. They took a huge hit during the pandemic. And I always said in my previous videos, I want to get to around 100 or more shares with these guys, because that's when I can start buying more stocks and, buy the quarterly dividends. And the symbol's STOR. This is Warren Buffett owned. Again, the real estate sector and financial sector took a huge hit. People are still capitalizing on the dip in these stocks. And again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but I like these trends. They're not doing too hot against the S&P. They're not traditional or Roth IRA material. I'm going to be honest with you. They're just taking dips. One point they were, but right now I just like these guys because their dividend hikes, their revenue strong, and it's just, I know it's like, how do you want to say this? Like, when certain time periods or time frames, pandemic or recession, these guys take a big hit. If you're going to invest in something like a real estate investment trust for a traditional Roth IRA, I don't know if this is the best one. I know in the past 5 years it's done well against the S&P. It was 2450 and gone up, but that's when you have stocks like O or Stag that can really do some damage, and their price per share has gone up. So I kind of like those guys a little bit better than Store Capital. So 4.99% dividend yield. Year range is 3067 to 3713. You can maybe put it in your traditional and Roth IRA, because if you look at the trends over time, with its price per share, it has gone up slowly, but not too fast and not too aggressive, in line with the S&P. So that's one thing. In the past 5 years, it looks okay, but market cap is 8.42 billion US dollars. Its year range is 3067 to 3713. So the revenue is doing really well as well, which I'll show you. Again, this is in millions US dollars. 190, 284, 376, 452, 546, 65, 694. So during the pandemic, they did really well revenue-wise, and their dividend hikes are even better. Check this out. Look at this, 2015, 25 cents, then 27, then 29, then 31, then 33, then 35, then 36, and then 38 cents. You're basically getting yourself a raise. These guys are down, and the dip is there still with a PE ratio of 33.4. But remember, FFO is more important with real estate investment trusts. Dividend yield is 4.82%, and the annual dividend is 154. So let's jump to the next dividend stock. And altria is another sin stock. The symbol is MO. This is a hot one. The high yield dividend stock, and they've been doing pretty well revenue-wise, which I'll go over. A dividend yield of 7.15%, PE ratio 33.99, market cap 94.42 billion US dollars. Year range is 40.46 to 52.59. Day range is 50.27 to 50.98. Now people are going to smoke, and they're investing into the Mary Jane business, and people are going to dip. People are going to use smokeless tobacco products. People are going to use tobacco products. It is what it is. It doesn't matter how much you educate people, they're still going to smoke. And I'll show you the revenue. And financially, they're doing pretty well. This is in millions US dollars, 2014, 24, 25, 25, 25, 25, 364, 2019, 25, 110. Then 2020, they had an increase, 26,153. Now, I could see that going a little bit higher because people are stressed out during the pandemic. They lost their jobs. People are going to be smoking cigarettes to try to use it as a coping mechanism, and it's not a very good, effective coping mechanism. So that's one thing, but these guys are very innovative. They're trying to adapt and change as a company, and I'm going to be long in these guys for a long time. There's going to have to be some significant change to change my mind not to buy these guys, and I'll show you their dividend history. I mean, how can you say no to this stock? 2013, 44 cents, 48, 52, 56, 61, 66, 70, 84, 86, 90 cents. It's almost at $1. Very close to $1. It has a PE ratio of 34.01, a dividend yield of 7.19%, annual dividend of 360. So I think it's a deal. It's a high yield dividend stock. Again, I'm not giving financial advice. It's for entertainment purposes only. Disclaimer in the description. But I see them increasing their dividend over time. They have a reputation of increasing their dividend, and they'll do whatever it takes to increase their dividend. Because the moment they put a decrease of their dividend, people are going to sell and panic sell like crazy. That just happens. That's what happened with AT&T. People lost confidence in AT&T. Except these guys, they know what they're doing. They appear to know what they're doing. And so far, so good. And they're being very innovative with the Mary Jane business. Let's jump to the next dividend stock. So I just bought 8 shares of these guys today. I did a video on them a few days ago. Heritage Commerce Corp, HTBK. So this is a bank stock. It's a high yield dividend stock of 4.16%, a PE ratio of 16.68, volume 171.99K, market cap of 753.38 million US dollars. Its year range was 855 to 1294. Day range was 1225 to 1267. Its previous close was 1237. I tell you what, doing these videos, I'm still beat up from when I got sick, and I checked my oxygen at work. I'm like 93, 94%. So I guess I'm starting to fulfill my destiny of becoming a Sith with Darth, maybe I'll need a oxygen mask or something. But I tell you what, I am like fatigued when I work out. I have to take extra breaks, and I don't know if I'm going to squat today just to be safe with leg day. So let me show you the dividend trends as well as the revenue. This is what makes these guys very attractive. Look at the trends in these guys. This is in millions US dollars: 67, 87, 106, 116, 139, 152, and 160. If I see stocks that their revenue sucks and they're not doing really well and they're not in demand, I don't even look at them. I'd have to see something. I'd have to see some improvement. And these trends are beautiful. What else is beautiful is their dividend history. Look at this: 2013, 3 cents; 2014, 4 cents; 2015, 8 cents; 2016, 9 cents; 2017, 10 cents; 2018, 11 cents; 2019, 12 cents; 2020 and 2021, 13 cents. But you can see the pandemic being a little bit of an issue. They have a PE ratio of 16.47, the annual dividend of 52 cents. So buying 8 shares, they're sitting at 12.50. They're not doing too hot against the S&P, and they're a high yield bank stock. So I would say take it to the bank, the financial sector. They're taking a little bit of a beating, very slow to rebound. So that's why I'm, heavy into these guys, and this is why I'm trying to get to 100 shares of these guys. I can do some serious damage in my E-Trade dividend portfolio with these guys. I have M1 Finance and I have E-Trade. And again, my goal is $2,000 to $4,000 a month of my quarterly dividends and $1,000 to $3,000 a month of my monthly dividends. So QYLD, RYLD, XYLD, Realty Income, Agree Realty Corporation, Stag Industrial, Stag Stock, all those guys. But these guys are hot right now, and that's why I'm buying more. And I'm going to show you one. I really haven't discussed that much these guys in a while, but I still like the way things are. They're a high yield food stock. So let's check this out. So before I even go over Conagra Brands, there is a special on M1 Finance. If you sign up using my affiliate link, we both get $50. So you can buy a stock like this right away with your dividend portfolio. So the dividend yield of Conagra Brands is 3.53%, a PE ratio of 15.55. The market cap is 16.98 billion US dollars. The range is 3044 to 3909. They have a lot of products that I buy in the store, and I'm probably going to be buying today for meal prepping. So let's check these guys out. So here's some of their brands that I really love. Slim Jim, I haven't had one in a long time. Garden Inn, Duncan Hines, Healthy Choice, Ready Whip. How many people use Ready Whip? Marie Callender's, Hunt's, Earth Balance, Classic. Who doesn't love Classic pickles? Bird's Eye. So they have the steamable vegetables. I use a lot of their products for meal prepping, and now I'm like not drinking any booze or anything to slim down. And obviously with school, I just want to keep my mind fresh. It's not like I drink a lot or anything. I just want to keep my mind fresh for this crazy semester. Boom, Chicka Pop, Dukes, Ham, Cooking Oil, Frontera, Orville, Rickenbach's, and Udi's. So they have a lot of stuff. So check out their website, conagrabrands.com. And I'm going to show you their revenue real quick. Revenue-wise, they are strong and they're trending up. This is in millions US dollars, 9,000. It took a little bit of a hit in 2016, big deal. 2017, big deal. 2018, big deal. 2019, 9,000. 2020, 11,000. 2021, 11,000. So remember, like, people aren't going out as much. I did read some articles on that. People love meal prepping going into work. They have a lot of stuff that people meal prep. And every time I go to the freezer area at the store, it's hard to find a lot of their products because people are buying them like crazy. And I'm not even kidding. So I'll show you their dividend history and their recent dividend hikes. I need to get to 100 shares with these guys. Let's check this out. Look at this: 2017, 21 cents. Then they made a dividend hike in 2020 of 27 cents, and then 2021, 2022, 31 cents. So they're sitting at 35.40 with a dividend yield of 3.52% and the PE ratio of 15.61 and an annual dividend of 125. So let me know what you think of this video. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze 1 or 2 videos this weekend because I have to work. So keep an eye on my channel. So you guys take care and have a great weekend.